another day to do business. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations right here on Business Morning. I'm Ini John Mekwa, and we start from Nigeria today, from what happened in the market at the close of trade. We saw that the all share index regained the 160,000 level at the close of Wednesday straight. So the all share is up 0.4%, and the all share hit 160,591.76. For the market cap, that's the equity cap, it went up to 102.684 trillion naira after the market gained 409 billion naira. Activity yesterday was mostly green from volume, value, and deals was the only one in the red at the close of trade. Over 49,000 deals happened in Nigeria's markets yesterday. Union Daikon topped the gainer. Seplat also, I'm sure you've heard of the news of Hair's involvement in Seplat. Now they have a major stake, about 20% of Seplat, and that brought a lot of positive sentiment around Seplat. We saw investors flocking in there, and the share gained a whole 500 naira yesterday at the close of trade. That's about 10% also. Okomu Oil was also a top gainer yesterday, also gained 10%. Top losers were Cadbury, Austin Lars. For a second time, we see Austin Lars in the red, the second consecutive day. Alex also was seen in the red at the close of trade. Top trades had insurance, Universal Insurance, Link Assure, and then Access Co. We see a lot of profit taking happening in Access Co. I think that since the beginning of this week, and perhaps there's some news coming up around there. We'll find out. It might also be a good opportunity, to get on board the stock. If you believe your crystal ball on that. From the equities markets, yesterday we saw the very first auction, the NTB auction for 2026 by Nigeria. So, of course, we know that for 2026, the budget has a deficit of 23.85 trillion naira, and that money has to come from somewhere. We saw a majority of the deficit last year, 2025, coming from the domestic market. We saw the federal government very active in the market last year. That's the domestic market. I think they did just a few stops at the Eurobond market. So perhaps that would be where most of this 23.85 trillion will be gotten from. But we saw the very first move yesterday at the NTB, and as is in most cases, it was oversubscribed. Talking about the NTB, there was oversubscription, especially the 364-day tenure, significantly oversubscribed at 1.38 trillion, but the offer was 800 billion. They got over that. They got 1.38 billion. Investors seen there preferring the longer term. The yields, all yields moved up compared to the previous auction. We know there was a case late last year where Omo Security, coming from the central bank, had no transaction at all because both the central bank and the buyers couldn't agree on the yields. But we see that there's been a bit of movement upwards for the NTB yesterday. So this is it. For the 91-day yesterday, for that auction, the NTB auction, the offer was 150 billion, but subscription was 112.26 billion. That's the 91-day. That's the shortest of the securities on offer. Now, for the 182-day offer was 200 billion, and what was gotten was 49.91 billion. Allotment was 48.3. Now, this is where the interests of investors were seen largely yesterday in NTB's auction. For the 364, that's the longest of the securities offered. So while 800 billion was on offer, our subscription was 1.38 trillion. That's a whole lot higher. I think about 400 billion higher than what was on offer. So I will see if this trend continues, though, to see if investors are preferring the longer-term securities in 2026. And, of course, that shows confidence in the market, in the system, and all of that. But we'll see. This is just the very first one for 2026. We'll see if this continues to sometime later on in the year. Well, we'll go to the oil market now. Prices rose after 2 days of declines as a larger than expected draw in the United States crude inventories provided some impetus for investors to buy futures while they monitor developments in Venezuela at this time. Of course, that's the big story at this time. So let's look at the numbers now. This time yesterday, we saw this in red, about 1.5%, especially for WTI. But reverse is the case this morning. So those inventories showing that the United States has to draw out more than perhaps they actually saved in their reserve. That is maybe that notion of oversupply is not really true. So we see the price, Brent at $60.20 a barrel, WTI $56.20 after increasing by 0.39%. The U.S. crude stocks dropped 3.8 million barrels to 419.1 million barrels in the week ended January 2nd. This is according to the Energy Information Administration, and the expectation was for 447,000 barrels. The U.S. needs to control Venezuela's oil sales and revenue indefinitely to stabilize that country's economy. So at first, President Trump had said, the control of the oil and gas oil, especially infrastructure in Venezuela, was just for a couple of months, I believe, but now he says it's indefinite. Of course, many questions arise around that. They say they want to rebuild the oil sector and ensure that it acts in America's interests. That's the story that's going on now. We know that the United States seized 2 Venezuela-linked oil tankers in the Atlantic Ocean, and Russia provided security for those. And it's part of President Donald Trump's aggressive push to dictate oil flows in the Americas and force Venezuela's socialist government to become an ally. We'll be talking more about this, U.S., Venezuela, and the oil story, and of course, other consequences. But first of all, let's see this report by Olu Phillips, trying to capture some of the consequences and expectations as this ongoing issue with Venezuela's oil and U.S. intervention in Venezuela.
The world appears to be in a big movie theater as a dominant world power, the US, and President Trump continues to stay in the center of events, grabbing global attention and shaping conversations and alignments globally.
We have a very sick neighbor. It's not a neighbor, but it's close to a neighbor, and that's Venezuela. It's very sick.
At the Southern Hemisphere scene of events, it's been weeks of tensed moments following the U.S. anti-drug campaign that reportedly have sunk over 20 vessels in strikes since September 2025. It comes to a head on Saturday when the world woke up to this tweet by President Trump himself, leaving no room for doubts nor speculations. The U.S. Attorney General Pam Bondi said the Venezuelan leader was charged with a narcotic terrorism conspiracy and other drugs and weapons charges. Caracas declared an emergency immediately, condemned it, and called it an extremely serious military aggression that also saw a widespread world condemnation, including countries from Mexico, Brazil, Colombia, Chile, and others in Latin America, including the BRICS nations like Russia and China. It turns out eventually that there is an oil side to the story.
The country is a mess. It's been horribly run. The oil is just flowing at a very low level.
President Donald Trump has said Venezuela will be turning up to 50 million barrels of oil to the U.S. after a military operation to remove President Nicolas Maduro from power. That oil is worth $2.8 billion and will be sold at its market price, according to the U.S. president, adding that he would control the money raised and use it to benefit the people of Venezuela and the U.S. Now, if you compare notes, there might be implications for regions, producing countries, and petrodollar dependent countries like Nigeria. Should we be worried?
Nigeria should do everything within its power to guard its national asset jealously, especially its crude assets, right? Develop it and use the proceeds to develop the country. So it is important for Nigeria to understand that this is a national security issue. Ramp up production, do the needful with regards to production, strategic reserve, and meeting local demand. We don't want to do anything that will make us fall to the level of Venezuela at the moment. And kudos to the government, because as at about a year ago, Nigeria was below 20 rigs operational.
Low prices if outcomes tank, or high prices, either way, there is a place in history for Nigeria. Venezuela's daily crude output plummeted from about 4 million barrels per day in the late 1990s to under 1 million barrels per day today, a decline in the order of 70 to 80% for a country with the world's largest reserves of over 300 billion barrels of oil, accounting for 17% of world's proven oil reserves. It's Venezuela today. Potential next victims can wake up and smell the coffee or become another statistics. Olu Phillips, Channels Television News.
Well, that's it. The drama going on overseas, but obviously affects other countries as we head there. We saw the price of oil move. Yesterday it was down more than about a percent and a half. This morning we see it in the green again. Stories and everywhere. We have Dumebi Oluwole here. She's manager with financial derivatives, but I mean she deals a whole lot with the economy and should help us understand all of this.
Yes.
Dumebi, Venezuela is very far away from us, and so is the United States. But our revenue is based on oil, and all of these people are all connected to oil. So I guess Nigeria doesn't have a choice but to show concern and know what's going on.
Yes, you're very right in that, and I do understand the sentiment. So of course, like you had rightly mentioned, there's an entire spat going on right now, the global economy and how that is impacting crude oil prices. So I think it's important that we contextualize all of these countries and what exactly is going on, starting with Venezuela. So Venezuela is one of those many countries that resource rich, especially with crude oil. Venezuela has the largest proven oil reserves. I mean, they have oil reserves higher than Saudi Arabia, which is the highest global.
I think they have 300 billion.
Yes. Now, proven oil reserves. Now, beyond the oil reserves that they have, the quality of their crude is very thick, right? And one of the best you'd find globally, right? What this means is that there's a lot of demand for that kind of crude, right? Especially because of the byproducts you can get from it. It's not limited, right, as such. You now also contextualize Venezuela in the global and international landscape, right? One of those countries that have experienced sanctions on how much of their crude they can sell, right? They're experiencing sanctions across so many other aspects. And it's one of the countries that you'd find that saying, where they're saying their rule of law, or so to say, they have been run by, I would say, an autocratic government, so to say. And based off of that, you're seeing sanctions follow suit. I would say another example of a country that has experienced such, sanctions based off of crude oil, and another example with gold, you see Libya in one of those cases, and another country, Zimbabwe, right, which is for gold. Now, what these sanctions do based off of maybe they are not following the rule of law for democracy, or so to say, what that means is that the country is limited in how much revenue they can generate.
All right, maybe please just pause on your thoughts, and we'll continue on that, because we have to lead our DSTV viewers now to the FCT Minister, Mr. Nyesom Wike. We know he's been doing some rounds. I think he calls it a thank you visit to the local government, but this time he's going to visit the Speaker of the River State House of Assembly. So that's for our DSTV viewers. For other viewers on the other platform, please do stay with us here on Business Morning. And if you're on DSTV and you want to continue watching Business Morning, just go to YouTube and switch to the next platform, and you'll be right here with us. Dumebi, I hope I didn't buy you away. Okay, please go ahead.
So I've contextualized Venezuela, right? Then we look at the U.S. Trump has been on an entire, spree of wanting to reduce oil prices. That has been a huge mandate of his because of the expectation that when oil prices reduce, gasoline prices reduce, and inflation reduces,
and interest rates will reduce.
And so based off of that cycle, he has been on that spree to reduce oil prices. In fact, if you remember in 2025, literally he told OPEC to increase oil production, right? So we're seeing him move in that regard. Now, we have gotten to a point where we're seeing a lot more, and like I think I said this on Friday, where we're seeing a lot more politics, really drive the macroeconomy. And to be very honest, that's what a lot of economists right now are pricing in terms of the commodities market and the broader macroeconomy. With this, we are seeing three things. Number one, resource imperialism. Now, the news going around today is that 30 to 50 barrels of 50 million barrels of crude oil are going to be taken from the U.S. and taken from Venezuela by the U.S.
And Russia is guarding that. But maybe,
yes.
sorry, you're going to continue. You
yes.
know, when I saw that story, I think it's like late yesterday, between 30 and 50 million barrels, and I'm like, so the president is in the custody of the United States with his wife.
Yes.
Okay, we have a sitting president now. I don't know if I'm allowed to call her the vice president now, who has agreed to work with the U.S. And now we have the U.S. boldly telling us how they have an agreement with Venezuela to take about 30 to 50. What's the agreement? I think this morning there's a story saying that Venezuela will get some U.S. products in exchange for that. Who's taking care of the people of Venezuela? Who's speaking for them? If we know that the acting president now, she's doing it to make the U.S. happy. The main president is in custody, and then one country, which is the United States, goes into another country and boldly has an agreement to take their resource. And President Trump has not hidden the fact that he's interested in Venezuelan oil.
Yes, I mean, it still boils down to what I was saying, resource imperialism. It's pretty much a dominant economy taking over resources of a smaller economy. That's just what it is. And the reason why I'm saying this is because this playbook is not any different than what has happened with Libya or what has happened with Zimbabwe when you look at their gold, right? Zimbabwe's story is pretty much more different, but the playbook and how the U.S. has moved in this regard, it's not so different. It's not so different. When you really dig deep into the nuances of how these kinds of moves go on with dominant economies and how they come to resources, just not to sound very deep, so to say, the core of it all is that we have seen the U.S. boldly say, okay, this is what we want. We did this. This is what we've done to get this. Now, whether we like it or not, it's happening. Now, when we talk about who is taking care of the people of Venezuela, I think I will say this, that this is one of the situations where you're just going to watch and see how it eventually plays out. Reason being that we can't really say that this is exactly why the acting president is doing what she's doing. What if she's trying to just douse the situation down?
Stay in the good books of the U.S. so that she stays in power.
Well, whether that might be the case, whether that might be the case. I mean, it's not far-fetched. Politics, again, like I said, between 2024 and 2026, as of January that we're talking right now, politics right now has become a driving force in the macroeconomy. And not until we see how the political environment is moving, which this was quite unexpected, right? It was a huge. We saw some of the trends, that okay, this could likely be the case, but not exactly in this magnitude, where a sitting president is removed and kept in the custody of another country.
And
their resources are taken. And remember that between the U.S. and China, there has been a lot of diplomatic issues, right? Diplomatic issues, resource issues, and those tensions, Venezuela also sits within that. Reason being that China was one of the biggest importers of Venezuelan crude. Now, with the blockade from the U.S. to Venezuela, prices of Venezuelan crude has also increased. Between when the abduction, well, let's say abduction now, when the sitting president was taking off seat and today, the price of Venezuelan crude has actually increased by over 10 to 15%.
So it's now more expensive for China.
So it's now more expensive for China. And remember that I told you that Venezuelan crude is thick, very of high grade and of high quality. U.S. refineries are built to refine such texture of crude oil. And right now, the U.S. refineries, once they have access to that crude, the refineries are up and running. What that means that there will be an increase in production of refined petroleum resources or refined petroleum products. What that means that there's going to be an increase in supply. There's an increase in supply, prices fall. Beyond that is also an increase in supply of crude oil to the market, especially for the U.S. Because remember, beyond the U.S. being an exporter of crude oil, they are also a major consumer.
They are the biggest consumer.
Exactly. So if they have 30 to 50 million barrels already supplied to them, the refineries are running, demand is also softened, prices are likely to fall.
Their reserves are also, because this morning we saw that their crude stock depleted more than expected. Exactly. But maybe let's bring this home.
Yes.
Because when President Trump issued that, was it threats? And then subsequently we saw the
airstrikes.
Exactly.
Yes.
Nigerians themselves were divided to say,
Yes.
oh yes, our government is not taking care of us enough, so we don't mind the United States. And another arm, another group were saying, at what price would the United States
do
be
this for Nigeria?
Exactly.
Yes.
Because President Trump will tell you this is that's what he's done with Venezuela.
Yes.
And United States dominates the United Nations, the World Bank, and all those. So
Yes.
who's going to stop the United States? So I wonder if this paints a picture of a probability of what may happen in Nigeria. I don't know what you've been hearing about that.
So, I mean, earlier in, late 2025, I did give a probability of a 60-40 chance of the U.S. airstrikes actually happening. Some people thought I was being too dramatic, that, oh, it's not going to happen, it's not going to happen. But I mean, my 40% chance actually stood. It did happen. It just wasn't too shaking that the entire
But we
nation...
don't know what's in the works. So
but we don't know what's in the works.
Exactly.
But my point is, again, that the playbook is not... If you look deeper, you see that the playbook is not any different. With Nigeria, I will say this boldly, that there is a chance that there's some agreement for resource for defense. There is that chance. And it's not any different from what some other countries have done, whether with Russia or even with China, right? It's not out of the works for such an agreement to happen, especially when countries do not have the financial capacity to actually pay or get their own defense mechanisms, in place. I will say it's not far-fetched that this might be the case. It's not public, it's not very out there transparent for us to really know, but I will say that it's not too far-fetched for us to think that way. Now, there are two scenarios. The first scenario is that, and we have templates of this, remember I mentioned Libya, and now Venezuela is another example. The templates with Venezuela and Libya is that we have this resource dominance, right, from an outside party that begins to cripple the economy, because what happens now is our resource is no longer necessarily ours. And you have to consistently pay for every defense provided. A resource level has to go down. And what this means is that we have to be more strategic. But the second scenario is that, oh, this is done, Nigeria gets its, feet back up, insecurity is completely depleted, and now Nigerian, defense levels have increased. We have, there's good news going around in that light. The bad, well, not necessarily the bad news, but I would say the next scenario, which is more likely, right, is that we have our resources to some extent being paid, used to pay for, the defense being provided by the United States, and what that means is that there's less crude oil to be refined to the refineries that jump-started or were catalyzed earlier in 2025. Now, what this means is that we have to find another way to increase our crude oil production. Yeah. Now, what are we going to do then? So does that mean that more IOCs are going to come in? I doubt that. Reason being because there is the macro environment is not necessarily, or will I say, the geopolitical environment is not necessarily stable. So what does that mean for their future, right? What does that mean for their future? Now then, I think I would just say this simply, that there is this scenario that is likely to happen. And the downside to this is, number one, Nigeria's crude oil production level is not necessarily going to hit that over 2 million barrels that we're looking for. And then there's fiscal, slippage. We're having issues generating more revenue. And with issues generating more revenue, we're likely to look into more debt. But when you look at what has now happened with the monetary policy side of things, how investors have been happy with our, dollar bond issuance and then our euro bond issuance, likelihood of that is the financial strain might likely be, reduced, because it will be offset by investor confidence, being happy on the benefits that we've seen from the reforms.
Maybe let's not forget something we also mentioned on Tuesday, which is that this is the pre-election year.
Exactly.
We see election bells ringing everywhere,
yes.
and all of that.
Yes.
And the other thing is our solid minerals.
Yes.
We know some states, I believe Katsina also, they have to stop mining because of insecurity.
Yes.
And I don't know how much of it seeps into the government's official coffers. And these are the areas that may be targeted, when we talk about, we're using resource for defense and things like that. And, if the government would intentionally coming to these agreements. That's on the one thing. But I mean, when another country now is controlling and dictating the facts,
the terms,
the terms exactly, then it becomes a whole lot of issues.
You're not wrong there, and I think our resources again have to be very much protected. I've always been an advocate for state governments actually becoming more comparative advantageous, so to say. Reason being that they take ownership of the commodities that are within their states and actually build on those commodities, increase production, be more attractive to investment. With this now, of course, there is that chance that insecurity, if it's not insecurity that is affecting their production, probably the airstrikes, disrupting, economic activities within those regions. And then there's that concern of state governments becoming even more dependent on FAC. Right, and we've seen at least late 2025 where FAC disbursements had declined because oil production as well. Sorry, oil production and oil prices were not exactly the way they were at the middle of the year or even earlier in the year. And what that means again for the people where the government is not necessarily able to meet up with salary payments consistently or as much as they would like. And remember, the tax reforms are also in place as well. So there is a lot of moving parts to it, and I think it's one of those situations where transparency and communication from the federal government to its people on what exactly is going on is extremely important. Why? Because again, like you said, it's an election year, right? Or a pre-election year rather, and people are already gearing up for what it's going to look like. So I will say that tensions are not necessarily tensions, but people are becoming more sensitive. And if the federal government does not communicate with people, or even their state governments do not communicate with people, and we're seeing more of political movements going around, what that means is that there is, towards the end of this 2026, most likely we'll see social tensions continue to brew up ahead of 2027. And that is a huge risk for businesses.
Disruption.
Yes,
major
for businesses
disruption.
and investments.
So maybe we're almost out of time, but FDCC's December's inflation at 30%. And I was saying before the show came up, I mean from 14.5% to 30%. That's a huge move.
Yes. I mean, it's pretty much base effects. Nothing too much to worry about. Again, we're coming from a very, very low base as of December, last year, and a lot of the changes with the rebasing exercise. So we use the December 2024 to start off a very beautiful trend of inflation numbers in 2025. So this December 2025 is going to tell us, okay, pretty much you started low, we're ending high. It's just basically base effects.
So it's just a year on year.
Yes.
So but I think we can, if we measure November, December, that should give us a more realistic.
Of course, the month-on-month inflation trend. I think we did see that kind of take up in November, and pretty much it was explained. There's an increase in consumption, increase in demand, the festive period. Yes, and to be very honest, when you even consider the fact that certain commodities, the prices didn't overly spike. So what that means is that heading into the December month-on-month inflation numbers, even though it might increase, when you consider the fact that the Naira also kind of depreciated as well at that time, but pretty much it's just base effects. When we see the January numbers,
we'll see a more realistic.
Yes,
hopefully. All right, maybe thank you so much for preparing us for that 30%, most likely 30% that we could get. Dumebi Oluwole is manager at Financial Derivatives Company. Thank you so much.
Thank you for having me.
All right, talking about domestic spending and the festive period, that's going to be our next conversation. Tourism, entertainment, travels, especially during the festive season. Some good news also coming out from the data that we have there, but that's after the break. Please stay with us. back. It's still Business Morning here on Channels Television. Yes, we're just coming out of the festive season. Some people still have the spirit hanging around them. And one of those industries or sectors that thrive during the festive period is tourism. So let's look a little bit about not necessarily just the festive season, but the sector generally in Nigeria, the tourism landscape. In 2025, we did see some interesting numbers. We see contribution to GDP increasing, and it hit 11.2 trillion naira. Total revenue about $3.77 billion of tourism. Domestic expenditure is very interesting. We saw it increase compared to previous years. Domestic expenditure through tourism went up 6.1 trillion naira. We had international visitors receipt hitting 803 billion naira. Arrival growth grew in the first half of last year, 2025, by about 12%. But this is not the best we can do. But we did see a lot of dirty December activities and carnivals and all of that. When I have the Dr. Lucky George, who is the Executive Director, African Travel Commission. He's very active in the tourism industry to tell us how much money they made in 2025. Dr. George, good morning and welcome to the program. Happy New Year to you.
Happy New Year and good morning.
Great. So, I mean, we see these interesting numbers coming from 2025, and it's really nice to see that domestic expenditure increased in the year. I don't know if it's because the international flights were getting too expensive or if it was intentional, but however, we did see that interesting number coming from there. But you are in the sector, day-to-day operations. Did you feel the impact of increased domestic expenditure?
Absolutely. Like you rightly pointed out, the international travels are becoming so expensive for Nigeria, and most Nigerians felt, well, if I cannot go abroad this time around, why not holiday locally? And that's why you have seen that increment. Though it's been building up gradually, because over the years we noticed that most of the attractions are very difficult to get to. And of course, not that they are much better now, but because there are no options. Usually we used to go to the Middle East and of course to the West generally, and the cost of visa, the cost of air ticket, in order not to just stay at home, people want to holiday locally, and that is really helping and building up the numbers and the figures we talked about.
What areas would you say are most interesting to Nigerians?
At the moment, not much of adventure, I would say. Maybe you have to visit maybe an attraction out of the cities. So I think basically what we have and what we have noticed over the year is that a lot of city trips are more kind of attracting to a lot of young Nigerians. People want to go to Abuja, they want to go for a comedy show, they want to visit or maybe go to a music concert and all that. These are some of the things that are building up.
I guess that's where the term, they said last year, the term bleisure, be leisure.
Absolutely.
That was created
yes.
because a lot of people just want to combine business and leisure
Absolutely.
and maximize the opportunity.
Absolutely. So people go to, maybe if you live in Abuja, you want to come into Lagos and there's a concert going on in Lagos or a comedy show in Lagos and the other way around. Now you have it going around some of the major cities. You have Abuja, you have Lagos, Port Harcourt and Enugu. So even Benin is gradually building up, and of course the usual Cross River, Akwa Ibom axis.
Yeah, and this year we had the Edo Carnival.
Absolutely.
I don't know if we had the Delta Carnival, but no carnivals are all seems to be the trend also. We saw in December.
Absolutely, the carnival, because when you are expecting a lot of visitors from the major cities to the rural areas, what other options do you have? There are no leisure facilities, so the only thing you can do to keep the environment lively is to come up with one project or the other, like the carnival, the festivals, and the rest of them. So they are best local marketing strategy to keep the environment lively when people come visiting.
What about hospitality? How's that sector faring?
To my surprise, I can tell you for free that most of the major hotels in Lagos, in all the city, most cases they are running at 70–80% occupancy. Again, a lot of business activities, conferences, seminars, and even board meetings are everywhere across the country. And I can tell you the hospitality industry, which is the hotel, conference facilities, they are cashing out big time. And I can tell you some of the major hotels that are my partners, I go to them and they tell you, sorry, we're fully booked for the next 2 months. And it was so for some of them since September up to this very moment now that the holiday is over, so people are back to work and all that. So the travel and tourism industry, most especially the hospitality industry, they are the biggest player in Nigeria. And of course, they are cashing out.
Yeah, there was something that was going on social media that period too, that they were giving to the highest bidder. So even if you booked, ahead, if someone with higher price comes, I don't know if you heard of that.
I heard of it, but basically it's not the major hotels. It's those apartments, the Airbnbs, and the rest of them. That sharp practices are mainly within the rank and file. Because somebody will book a 3-4 bedroom apartment, and when he knows very well that the demand will come much later, then he up the price and the rates become so ridiculous.
Yeah,
and
that's something for the regulator.
Absolutely, and it's not sustainable. You don't promote a destination that way, because definitely I will go to where the rates are stable. When I budget $1,000 for my whole holiday, I will know that will be able to sustain.
Yeah, so people even, months ahead,
Absolutely.
They have paid. So you can't disappoint a family who already have plans and have made payments,
Like you rightly said, you mentioned about the authority who monitor all this. In Lagos, for instance, we know we have the Lagos State Tourism Ministry that is very active, but there's an element to tourism promotion that is lacking in Lagos State. So the whole activities of tourism in Lagos State, even in some of the states, maybe apart from Cross River State, that is very disjointed in the sense that nobody controls because they don't have a tourism board. It is the responsibility of the tourism board to do the effective monitoring, registration, classification, and ensure that some of these practitioners do not go against some of the basic rules and regulations of how the business is done elsewhere.
So there's no tourism board in Lagos?
No, Lagos does not have a tourism board. Even way back during the last governor, Mr. Ambode, when he was there, before he left office, he signed into law a bill that was passed by the Lagos State House of Assembly that the state should establish a tourism board. Because you cannot be formulating policy, doing oversight functions, and at the same time doing the marketing and promotion of the state. They are two different tasks entirely. And the way the Lagos State Tourism institution is set up at the moment, you don't have the manpower to do that aspect of the job. They have been very fantastic. The money is there to do anything you want to do. Why not put in place a tourism board? As directed, has been rightly passed by the State House of Assembly and signed into law for almost 4 years plus now. That has not been done.
So, what about travelers' experience in hospitality, in tourism, in the country and all?
In Nigeria, traveling in Nigeria, you will have one of the worst experiences you can ever think of. Yesterday, I was flying in from Abuja into Lagos. There were people that were supposed to have left Abuja since 2 p.m. in the afternoon. We did not leave until about 7 p.m. in the evening. It's always like that. And the reason is that the facilities, the airlines, the transportation, the road infrastructures, they are not just adequate enough. It's like we're not prepared. It's like a staff who is employed and you rely on your neighbor's donkey to get to work every day. You can be rest assured that you get late for work sometimes. And that is how we operate.
Are you advocating for a domestic airline? I thought we now have, for instance, we have the states, Ibom Air, we have the one for Kala, Cross River State.
Absolutely.
So, and I thought the notion was that the federal government or the federal carrier is speaking through the subnationals.
Unfortunately, it doesn't work that way in tourism. You need the mega carrier to service a country of over 200 million people. At the moment, you'll be surprised that we have just only 30 airworthy aircraft in Nigeria. We're not talking of private jets. We're talking of the major airlines. So the point we're making here is that the airlines lack the capacity. With all due respect, these guys are working under they're operating in a very difficult environment. But where is the capacity? The capacity is not there. You book your flight for morning flight or late morning flight, you will not get to your destination until about sometimes 12 midnight, because the same aircraft will have to do 60 degrees across the country. And at the end of the day, all the passengers that have been booked for earlier flights are subjected to what I would call inhuman treatment when it comes to what we do in the travel industry, that we're trying to give experience to people. We want you to get to your destination as early as possible, and you fly home very late.
So the airlines, I mean, we had extensive conversations late December about this, and the airlines came and said the issue is infrastructure and much beyond them. And then even their cost of operation is also something that's a problem.
That is not true. I can tell you for free that, yes, they are operating in a very difficult environment. But the problem is airline operators lack the capacity. A country of 200 million plus, 30 aircraft that is airworthy in this country. It's a joke. How do we rely on them? So the problem is that we operate in one of the most expensive airfare structure in Africa. If you buy a ticket from Lagos to Abuja, for instance, if you look at the breakdown of the ticket, you will see what the airline will tell you, the XY or the YQ or whatever they call it, fuel surcharge. If you buy a ticket for 300,000 naira, you probably see that 200,000 out of the money goes to the airline directly. Then the base fare, which they call the actual fare, will be about 60,000 naira, and about 40,000 naira will be for tax. So they are cashing out on daily basis.
But they have charges for all those agencies and all.
I'm sure China's TV pay charges to government institutions as well. You pay your taxes. So there is no business without charge or cost of operations. We all do it. We run businesses. We, the media organization, you know very well I'm from the media organization, so we pay taxes. We pay our staff. We do all our commitment to government, to local government. Does that mean our TV stations should tell government we will not pay our local government tax, we will not pay the state tax and all that? We do all that in our businesses, but what the airline want is that they want everything practically free. That is what they want. But it will not happen anyway, because the problem is that they are saying they can run it. We know they are in a very difficult environment, but they lack the capacity, and that is a fact.
And these issues and more, especially looking at it from the African point of view, is what the African Travel Commission seeks to address.
Absolutely. Now, for the first time, we're bringing in the big players. We're bringing in the AFDB, Afreximbank, and ECOWAS. ECOWAS is our partner in our summit holding next month in Lagos. The idea is we realize that funding is a major problem in the travel and tourism industry. So we are bringing in these key players to sit down with the operators across Africa and say, look, what are the problems? If Ethiopia Airlines, sorry to say, I know it's not an advert, but if Ethiopia Airlines is running and is 100% owned by government and is one of the 7 most profitable airlines in the world, why can't a country of 200 million people? We are richer than Ethiopia. But the problem, the argument over time is that, look, Nigeria, we don't have sincere people to run the national carrier. For that reason, we should not run. Then we rely on Ethiopia Airlines, Kenya Airways, thereby making tickets so expensive. So we want to bring in all these key players in, even the government officials. Then we will educate them why we need a national carrier, why certain things need to be done. And of course, we have to talk to the investors and say, look, these are areas that you need to. I'm very sure there's nobody that will invest in any major carrier in Nigeria that will run at a loss, because the market is there for you.
But the overhead cost is overhead cost and entry cost is scary from what I've heard.
No, it's not true. It's not true, for God's sake. You know, the problem with this part of the world is we try to create fear in everything we do to say it will not work. It will work. Ethiopia Land has worked. If you go to Ghana, Ghana has one of the best public transport systems. If you are in Accra, you can go to any part of Ghana in a public transport STC that is run by the government. And how did they get it started? They got the money from the pension fund and invested it in a very reliable, strong transport system. Do we have that in Nigeria here? The answer is no. All the individual transport companies, they can just wake up one morning and increase their fare by December, because knowing fully that it's a cash out period. So it's not possible, and of course, we want especially, there's one other institution we want to really bring to the table, which is the Bureau of Statistics. Because I saw the figures, I'm so impressed now that the figures are going up every day. I don't know where you got your figures from, but again, what is attributed to the travel and tourism industry as far as the Bureau of Statistics is concerned is food and beverages and, of course, hotel accommodation. Transportation is not part of what they calculate as part of travel and tourism contribution to the GDP. These are some of the issues we have. So they need to know and key into the United Nations Statistical Committee recommendation of how travel and tourism GDP to the economy is calculated.
All right, thank you so much, Dr. Lucky George, Executive Director, African Travel Commission, for your time. And we hope by the end of 2026 there will be an improvement. I mean, the challenge of Ethiopian Airlines is right there in front of us. Thank you so much for your time.
Thank you very much. And I'm inviting channels to be part of what we'll be doing in the next 6 weeks. And of course, well, you are most invited.
All right, thank you so much for the invitation. All right, let's take a short break now. When we come back, we'll go global. Please stay with us. Time to go global now with Laddie Williams. Laddie?
Yeah, good morning, Ini. Another day, another dollar, and geopolitics still driving sentiment right there.
Yes, it is.
In the global space. But let's get a sense of how U.S. markets fared yesterday. It was quite mixed, but our correspondent Murray Bird has more details.
The U.S. stock market was mixed on Wednesday as the Dow Jones was up at 0.2%. The S&P 500 was down at 0.3% after a record-setting day just on Tuesday. And the S&P 500 also saw some bit of a drop late in the day, while the Nasdaq also fell 1%. This has many investors a bit concerned as they're watching to see what will happen with the U.S. and Venezuela, specifically as the U.S. has promised that Venezuelan oil will reach the U.S. This promised deal has many investors watching to see how this will have an impact on the U.S. economy and geopolitical dynamics. There's also much speculation around the U.S. job report which is being prepared, as the U.S. economy is at the forefront of many investors' thoughts, and also the U.S. economy's stability in the coming weeks and days ahead.
Thanks, Maria. Well, we'll get updates on U.S. futures at 1:30 on Business Incorporated. To other stories now, the New York Times has hit a major market milestone with its stock climbing to a record high, about $71.25, capping a remarkable 35% rally over the past year. The surge reflects growing investor confidence, that's in the company's digital transformation strategy, which has driven steady subscriber growth and stronger revenues. With a market value of $11.56 billion, solid cash position and financial health rated great by Investing Pro, the media group's successful pivot away from traditional print is increasingly being rewarded by the market. And we see global markets are bracing for another potentially volatile session as investors turn their attention to a heavy slate of U.S. economic data due out today. The main focus will be on weekly jobless claims, a key gauge of the health of the U.S. labor market, that could shape expectations around future Federal Reserve policy. Traders will also be watching a series of other important releases, including trade balance, productivity, and consumer credit data for fresh clues on the direction of the world's largest economy. And Apple and JP Morgan Chase have announced a major partnership shift in the credit card business, with JP Morgan set to become the new issuer of the Apple Card, replacing the current provider in a transition expected to take about 2 years. The deal will move more than $20 billion in card balances onto Chase's platform and marks a significant expansion of JP Morgan's consumer finance footprint. even as the bank prepared to take a $2.2 billion charge for credit losses tied to the transaction. The move is still subject to regulatory approval, but both companies say Apple Card users will continue to enjoy the same features and benefits during and after the transition. And to electronics now, Samsung has delivered a strong earnings surprise, forecasting a much bigger than expected profit for the fourth quarter of 2025 as soaring memory chip prices driven by booming demand from artificial intelligence companies continue to reshape the global semiconductor market. The world's largest memory chip maker said operating profit likely surged to 20 trillion won in the October-December period, more than triple last year's level and well above market expectations, underscoring how the AI-driven supply crunch is supercharging earnings across the chip sector. And to other parts now, Sri Lanka's central bank has struck an optimistic tone on the country's economic outlook, forecasting growth of between 4 to 5% in 2026 as the crisis-hit nation continues its recovery. Speaking while unveiling the Central Bank of Sri Lanka's policy priorities for the year, Governor Nandala said the outlook broadly aligns with government projections, though he cautioned that the pace of reforms will be crucial in determining whether the economy beats or misses expectations. And Chinese semiconductor stocks climbed today after reports that Beijing has instructed some domestic tech firms to pause orders for NVIDIA's H200 AI chips. The move appears aimed at preventing stockpiling ahead of a formal policy decision, while encouraging the adoption of homegrown AI chips as authorities weigh on how and whether to allow access to high-performance H200 accelerators.
Thank you so much, Ladi. As we get to the end of the program, I would like to tell you what's happening in the market. Nigeria's equities market at this time. The positive sentiment continues in the market, and it's still at 160,000 level, but it's really close to 161. Perhaps when Ladi comes during Business Incorporated, it would have hit there because it's 160,985.13. It's up 0.24% already in early trade. We'll see what happens at intraday. That'll be during Business Incorporated. I'm Ini John Mekwa. Thank you so much for being a part of the program.